All right, good evening, everybody. We are the consumer staples sector for the Student Managed Investment Fund. My name is Christopher Yoda. I'm the sector manager.
Alejandro Porras.
My name is Anastasia Sildinska. And today we would like to open up with the U.S. outlook since that directly affects consumer sentiment. As you may know, the S&P 500 index has been displaying strong performance. The U.S. unemployment rate has dropped to 5.4%, and the U.S. real GDP has grown by 2.4%. Overall, that shows that our economy is strong, and that's good for our company. For the industry analysis, what we would like to show you is that the S&P consumer staples, the food and beverage index has outperformed both the consumer staples as well as the entire S&P 500 index. Some of the key drivers for our industry is abundance of M&A activity as well as organic and natural product growth. Some of the characteristics are heavy competition as well as low price elasticity. And today we would like to introduce to you Tyson Foods. It's a global company that distributes chicken, beef, and pork and other allied products. What we would like to point out is our low beta of 0.22, which shows that our company's performance has a low correlation towards market volatility. Also, please notice that the forward PE of 10.43, and that is expected to significantly drop from 15.96. Also, some of the key trends for our company are the recent acquisition of Hillshire farms, as well as positive demand growth for the meat market. And I would like to pass it on to Alejandro to further talk about our brand.
Thank you so much, Anastasia. So something that we actually want to talk about here is our portfolio overview. Now, contrary to popular belief, we're called Tyson Foods, so our main produce is actually beef, which makes up 42% of our total revenue, trailed by a 29% coming from poultry and chicken. So one thing that we actually want to make sure that you all understand as we progress through our presentation are three main factors. One, that all of our segment subsidiaries are all either number one or number two within the respective categories. Number two, as Anastasia mentioned earlier, our grand acquisition of Hillshire brands and its potential growth. And number three, which is Tyson's hold on the U.S. frozen market as currently number two, as you can see as per the graph. So I did mention that we deal with the beef and chicken as our main forms of revenue, but in reality, Tyson Foods actually deals with all proteins altogether. Starting off with chicken, where we actually hold 21% of the market, currently the market holder. Next, let's go on to beef. We hold 24% of the market. We're another market leader. And then lastly, pork, in which we're second in the market at a 17%. So as you can see, it is safe to assume that approximately 1 out of every 5 pounds of chicken, beef, and pork in the entire nation comes from Tyson Foods. So as I mentioned before, we actually have the industry leaders as our subsidiaries. As you can see, Tyson, number one, number two, and other brands, number two, and unfortunately bacon as number three, but we'll disregard. So acknowledging that we're in the consumer staples sector, one thing that is very hard to come across is innovation. Innovation is very difficult because this is a very antiquated sector. So and by going through consumer demand, we've come to realize that more natural, more organic products are necessary to meet market demand, consumer demand. So Tyson has gone about by getting these three brands that represent each individual protein, starting with Open Prairie. Open Prairie deals with 100% vegetarian diet-fed Angus cattle, followed by chicken, which is nature-raised farms, which it deals with no antibiotics in that select brand of chicken brand, followed by pork, which is transported in sea salt and water to make sure that no preservatives are added and they get to their locations still fresh. So we mentioned today, but this isn't really today, it's actually been a few days now, but Tyson Foods has actually gone about to removing gentamicin as a whole, 100%. Gentamicin is actually a human-based antibiotic that's made to treat serious bacterial infections. Now, they've actually set a timeline as of this Tuesday that by September 2017, they would have removed all antibiotics from all their poultry by that timeline, meeting demands from head customers such as McDonald's and Chick-fil-A. And something that we mentioned earlier actually is our Hillshire acquisition, which has actually set us in for a huge amount of growth, exponential growth, in the form that going by Tyson's security in the market as the oldest company in the sector, mixing in with Hillshire's brand, is paving the way for those number threes, number twos, to position themselves as number one in their respective markets, and expecting a $4 billion revenue in annual sales within the next coming few years, mixing their operations and marketing talents into one major collaboration, making for one of the biggest acquisitions within consumer staples. So if you all take a second to take a look at these brands, you'll see that whether you're going to Publix or whether you're getting gas and you decide you want to get a hot dog, you're going to see some of these brands. You're going to see some of these brands. Some of these brands are at your gas stations, at your ballparks, everywhere.
Alejandro, I'd like to touch upon the market outlook for Tyson Foods. Now, Tyson's key market is the U.S., and here on the top left of your screen, you can see the demand for both chicken, beef, and pork in the U.S. Now, while there is a steady growth for chicken, we can also see that there's also a relatively stable demand for both beef and pork. Now, two key markets that we want to focus on is India and China, two very important emerging markets in the world. Now, in India, we can see a strong demand growth for poultry, while there is lessening demand for meat. In China, it's the other way around. We see a greater demand for for pork and for beef, as well as rising demand for chicken as well. Now, in India, we have operations through a joint venture in order to supply the demand growth in these markets. In China, we have 3 plants in order to focus on the demand in China. On the bottom right of the screen, we can see the global demand for all meat products. Between the years 2010 and 2050, there's expected to be an almost 60% growth in meat demand. Now, we feel that Tyson, through its #1 leadership in its core markets, is poised to take advantage of this growth and able to meet the demand globally. Now, as far as our growth outlook, I want to point out the current revenue of Tyson, which currently stands at $39.6 billion. And we have a compounded annual growth rate of 10.27%. Now, when looking at EV over sales, EV over EBITDA, and our PE multiples, we see the general trend of growth within the past few years, as well as continued growth within the next 2. And one thing I would like to touch upon is our debt distribution. When we acquired Hillshire Brands, we did take on a large amount of debt. However, although our debt has increased from a total debt to equity multiple of 38 to 91 between the years of 2013 and 2014, I would also like to point out that our interest coverage ratio has increased from 3 to 9.23 in 2014. I'd also like to mention that while our debt has grown, so have our assets within the past few years, and we have a relatively low cost of debt in terms of 4.5%.
And now I'd like to go into our SWOT analysis. Our strengths are growing earnings as well as diversified portfolio. Some of our weaknesses are in our international markets. Opportunities include our current markets, possibility of growth, as well as new segments to enter. And our threats are the livestock illnesses as well as our competition. For our company risk, we would like to outline that changes in consumer preference are a big one. But how does Tyson mitigate that risk? Just like Alejandro mentioned, Tyson has a strategy to eliminate its antibiotics from its products. So going towards that organic and natural products. And then price and availability of raw materials, we can enter into forward contracts and swaps to mitigate that.
Now, I'd like to come back and touch upon the fundamental analysis of the company. While we have been growing recently within the past few years, we did take a slight dip in 2014 due to our large amount of debt that we took on in regards to our acquisition of Hillshire. However, I do want to point out between the end of 2014 and our latest figures, we have increased our margins, and we are poised to keep increasing our margins within the next 2 years to come. Moving on to our comparable analysis, I do want to point out that Tyson has underperformed its narrow and wide competitors in its key margins. However, one thing we would also like to mention is that past performance is not necessarily indicative of the future performance of the company. This is why I would like to highlight on the bottom right of the screen the margin growth for Tyson. Now, 2 key margins I'd like to touch upon are gross margin growth of Tyson being at 27% versus his competitors at 4%, and our EBITDA margin growth, which is growing exponentially at 42% versus our competitors only growing at 14%. This is why we feel that Tyson is poised to grow substantially more than its competitors, and we feel it will be a great buy. Now, moving on to our valuation analysis, we perform various valuation methodologies. Looking at our DCF, our assumptions were a WACC of 6.2% and a conservative growth rate of 2.3%. We came up with an average price of $46.75, with in relation to our current price of $39.21, gives us a 19% upside.
So to conclude upon our presentation, we actually want to touch upon a few key points that actually make this a favorable equity for our portfolio. Number one, the low risk. As you are able to see earlier, our beta is 0.22. Our volatility to the market is really low, followed by our discounted value. Compared to our peers, we're at a discount, and the time is now to buy this equity. And why? Because we just made this giant acquisition of Hillshire, which is set for a large portion of exponential growth, followed by we're the leaders in our international market segments, where right now we have operations within India and China, aside from the United States as well. So with that being said, we'd like to thank you for our time, and we'd like to open the floor for questions.
So the PE multiple and the forward PE multiple would changed a lot. It would indicate your earnings have gone up a lot in the last year. What's different? What changed so much in 1 year?
Well, this is projecting our forward PE of our future earnings potential. So as mentioned earlier, through our recent acquisition of Hillshire and our growing brand segments and our key placement as number 1 and number 2 in our key segments, this is why we see the huge earnings growth within the next 12 months, which is why we have our PE dropping substantially from 15.96 to 10 point. Accretion of earnings within the next 12 months.
Tell me more about the organic market.
Within the organic market, not only are we trying to position ourselves to be the leaders in organic markets, but we're also making sure that we're ahead of the game when it comes to being completely antibiotic free. If you would happen to know our competitors, if you could go to our narrow comps. Currently, we are set to accomplish our antibiotic timeline first than our competitors. Pilgrim's Pride and Sanderson Farms, their timelines are later. Now, we're trying to match McDonald's by making sure that we finish before the end of 2017. So we're set for September 2017. And as I mentioned earlier, we have the 3 brands to mitigate natural products within our 3 major proteins, pork, chicken, and beef, as we saw in the last slide regarding innovation. These are our major brand holders, and they're only expected to expand into their respective other categories of other beef and pork and chicken. That's a great question, actually. Well, let me ask you a question. Whenever you're dealing with, let's say, Chipotle, who are their customers? We, us, everyone in this room. And we hold them accountable for what we eat. So I don't need a McDonald's anymore because it's not healthy for me. So I'm not going to go anymore. So it's not just me. It's a billion other me's out there. So then that's happening. So then what's holding them accountable is their customers. And now because Chick-fil-A, Chipotle, McDonald's, they're losing customers because of that. Now they're holding their vendors accountable. For example, Tyson, setting in a timeline. Chick-fil-A set in a timeline as well. It's consumer demand to go more natural and to go more antibiotic free because we as people are caring more about what goes into our bodies. Yes, it's actually a global thing. For those of you who were here last semester, we pitched Whitewave Foods, which, if for those of you who don't know, actually holds the organic industry in regards to dairy-free milk, such as Silk, organic salads, such as Earthbound Farms. So it's this consumer demand throughout the whole country. Whitewave Foods that actually made impact, for example, in China because they had regular milk that was being passed out to their babies, ended up causing over 2,500 deaths of infants. And then that ultimately leading people to say, I'm willing to pay a little bit extra if this is safer for me.
I want to ask questions in two areas. First, on the price target, you had a slide where you looked at what consensus analysts' opinions were, and I noticed that the price target has been steadily coming down. That's the blue line, if I'm reading that right?
Correct.
Correct. So, you might be right and they might be wrong, but they've been getting less and less optimistic on this stock. What are they seeing that you're not seeing? Why are they getting less optimistic and putting a lower price target out there?
Well, this price target has been falling recently. This is actually also before our acquisition of Hillshires, and also it did fall in other aspects, as you saw on the stock price earlier, due to kind of investor sentiment in regards to our acquisition. Mainly when we initially announced our bid of Hillshires, we were kind of in a bidding war between a competing company, Pilgrim's Pride, and we actually paid a premium for the company. Now, with investors, it does not sit very well at first. However, we have been able to realize synergies within the first quarter of 2015, which is actually between September and December of 2014, and we already realized $65 million of synergies. Now, our synergy projections previously were $225 million, and we are currently, which was our cap, and now we're actually expected to keep growing and actually earn more than $225 million in synergies within the first year of the acquisition.
Then on the risk factor, I wanted to go back, on removing the antibiotics, from the chicken. I mean, they don't put those things in there, for the fun of it. They put them in there for a reason. And we've had, poultry and beef outbreaks and serious diseases. You talk about China. There's a milk, product that killed 2,500 infants. I mean, if you have an outbreak because you're not putting the antibiotics in, and you kill thousands of consumers, that's going to hurt the brand much, much worse than if they had biotics in there. So that seems to me like a big risk factor, not a big positive. So what are they doing to prevent the poultry products from coming up with with diseases that kill thousands of consumers?
That's another great question, and feel free to jump in whenever possible. But
All right.
but just so you know, as we all know, companies like to take the side turn when trying to find alternatives or trying to find a way to get something done. Now, that was the most efficient way to set in human antibiotics, but we all know that natural alternatives do exist. Now, according to their studies so far, they are working on, it sounds crazy, but they're dealing with basil oil, and they're also dealing with the garlic oil to actually implement within the feed of the actual hen and chicken and hen before they're being born, and just inserting it into their eggs and ultimately throughout feeding them. So they're looking for alternatives ultimately. You don't need to go through just going through, human-based antibiotics. Looking for a more natural approach is ultimately where everyone's trying to go for at the moment. It's just about innovation. Because at the end of the day, it's the same thing as the telephone and the telegraph. It's creative destruction. Everyone's getting rid of antibiotics. The first company to come up with a natural antibiotic for their chicken is going to be the leader in the market. So it's basically everyone in the industry is going that direction as well.
Confident that garlic oil is going to prevent these diseases in poultry, and we're not going to have a health outbreak and the stock drop 40%?
Well, I'm not a scientist, so I'll leave that up to them. But I have full faith in Tyson's budget to be able to come up with this option.
Yeah. I assume it's like beef. The antibiotics allows them to raise it with more density. It keeps the animals from getting sick, as opposed to protecting the food supply. So it affects the cost of production. As you're shaking your head, it's more that than it is the food supply. But it's a good question because there is a reason why they use these things.
I actually had the same question, but the question is they're operating at a very slim margins. So when you're getting into a situation where I don't know how much, a third of their revenue is chicken, right? So if you eliminate antibiotics from a third of your revenue stream, and then you need to be implementing something new, I mean, does the cost of that alternative increase, and by how much? Are they gaining some pricing power, so now these products are going to be more expensive? But you guys said that the price elasticity is none. So how does that work out?
In regards to pricing power, I'd like to tackle that first. Being one of the largest companies in the U.S. as supplying chicken, beef, and poultry, I think that we do have significant pricing power in terms of being one of the ones where we are the go-to brand for our customers, and increasing the price slightly will not greatly affect it. Now, also, I want to touch upon as far as antibiotics. There is still precautionary measures that take place, and we still use antibiotics, but this is actually removing primarily human-based antibiotics being used on animals. Now, they're also taking precautionary measures as far as keeping the livestock healthy in regards to controlling who comes into contact with the animals and making sure that there's more of a controlled environment, as well as keeping the animals away from other wild livestock that could infect them with any potential illnesses.
So potentially all these steps are increasing the costs or not?
Not necessarily increasing the cost because they have the precautionary measures, and they will reduce the cost by eliminating some of these human-based antibiotics in the poultry. Another thing I would actually like to add in regards to any potential illnesses that do affect their livestock, one thing that we found out through our research is that if the USDA actually deems a certain percentage, I don't want to say percentage, but a certain group of livestock is actually infected with a certain illness, and they're actually ordered to kill off that livestock and not sell it to the market, they actually compensate the companies for the free killings of these animals and their non-sale to customers.
Yeah, he's going to pick up the tab for that. I like that.
Any other questions?
Do you think your margins, last question,
Okay.
do you think your margins could increase? Are people willing to pay more, for the human antibiotic-free, poultry?
I would say that they are, given that this is a change that is happening in the company in order to meet the consumer demand and the innovation that we have taken in place in order to provide our customers with the products that they want. So they're wanting the products, and you can see that there is a demand for this healthy lifestyle of food, which is taking place throughout the country and throughout the globe. And we do feel that confident that consumers will be able to pay the prices for any added cost associated with all natural products.
Thank you. I'm getting hungry.
Yeah.
So, thank you so much, guys. Good job. So, I have a 45-minute speech prepared before we take the vote. Just kidding. How many in favor of Tyson? Tyson. 1, 2, 3, 4, 5, 6, 7, 8. Good. Thank you so much for being here tonight. I know it's a long night, but what you've done for the students is just something amazing, and I thank you for being here tonight. Thank you.